Ladies and gentlemen, good day and welcome to Bandhan Bank Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Mundra, Head Investor Relations, Bandhan Bank. Thank you, and over to you, sir.
Thank you, Tanvi. Good evening, everyone, and a warm welcome to all the participants. It's our pleasure to welcome you all to discuss Bandhan Bank's business and financial performance for the quarter and year ending March 23. We will take this opportunity to update you on the recent developments in the industry as well as on Bandhan Bank during the quarter. To discuss all this in detail, we have with us our founder, Managing Director and CEO, Mr. Chandrasekhar Ghosh, Executive Director and Chief Operating Officer, Mr. Ratan Kumar Kesh, Chief Financial Officer, Mr. Sunil Samdani.
Most people have no clue that in 2023, the best way to make money on Amazon is not with physical products. It's Amazon's other company, Audible. Audible pays me $8,000 to $10,000 every single month in passive income, and I'm not the only one. People like Katrina and Carla, Elena, Renee, all making thousands of dollars a month in passive income using the same system. And the best part is it's literally a done-for-you system. You're not buying any merchandise, you're not storing any merchandise, you're not shipping any merchandise, and you need zero tech skills to get started in making thousands of dollars a month in passive income from Audible. Now, I wish I could say I'm the genius who discovered this method, but I'm not. I learned everything from the Mickelson twins. I took their free training, the same free training that's linked below, turned around and made my first $100 in 7 days. And you could be next. All you need to do is click the link and I'll take you to a free workshop where you'll learn the same done-for-you 4-step process that we are using to make thousands of dollars every month in passive income. The reason people are having such amazing results so fast is because hardly anyone knows about this. Look, you could ignore this just because it's an ad, or you can click the link below and find out why this 4-step process is working for so many people and why it can work for you. And just by clicking the link and watching the short training today, you're going to get 3 bonuses that have not been offered before. So click the link to claim your bonuses and get in on the ground floor of this amazing opportunity for passive income. Look, the most important thing you can do right now is don't waste any more time. Click the link, go through the free training, and learn the 4-step process that is providing financial freedom for so many others. Click the link and I'll see you in the training.
Neurologists are stunned. They've confirmed that ear ringing is shrinking your brain cells. Tinnitus is now known as precursor dementia, according to the Mayo Clinic, where doctors have made a shocking discovery that changes everything we know about ear buzzing and how it relates to mental decline. So if you or a loved one are plagued with the invisible agony of ear ringing, buzzing, or chirping sounds, then you must see this. After 2,400 brain scans and 4 decades of clinical research, an award-winning ENT scientist has just revealed the true root cause of tinnitus, and it has nothing to do with damage from trauma, lifestyle, aging, or genes, but instead with faulty nerve hair linking between your ear and brain. Over time, this newly discovered nerve hair becomes frayed, and when broken, it mixes up your brain's interpretation of signals, causing the cringing, ringing, hissing, washing, and buzzing. This in turn causes brain cells to shrink, wiping out your memory by the minute. This world-renowned scientist was forced out of his practice after he revealed a billion-dollar secret he wasn't supposed to know. A clinically proven 10-second technique that could finally switch off those cringing sounds so you can feel completely normal once more. More than 85,670 people are already doing it. And not only have they been able to reverse their tinnitus, but they are also increasing their protection against brain disease and aneurysms while enjoying clear minds and sharp focus. Mark from New Jersey said, I thought I was doomed. But now I'm back to my normal life. After 10 years, I have found peace again, and my headaches and vertigo have also gone. Relief is possible no matter how old you are, your current condition, or how severe your tinnitus has gotten. Tap the blue Watch Now button below for a free video. You'll see how this unconventional method takes only seconds a day and gets to work to mute the constant ringing and buzzing almost instantly. It calms the nerves and reduces inflammation, which helps send the proper signals back to the brain. And when this is corrected, the agonizing sounds are silenced for good, all without the need for medications and their side effects or expensive therapies. So stop what you're doing right now and click the blue Watch Now button to see a short eye-opening video. You'll see how thousands of people are using this strange 10-second technique to silence the buzzing, clicking, ringing, and pain. And best of all, live life like normal again. However, the billion-dollar healthcare industry has already removed this special presentation from the Internet twice before in a desperate attempt to protect their profits. So it's uncertain how long the information will remain available this time. Tap the blue Watch Now button below before it's too late.
Head Retail Banking, Mr. Shantanu Sen Gupta, myself, Vikash Mundra, Head of Investor Relations, along with other senior management team of the bank. We will be happy to provide you with any clarity if required from the current quarter numbers and way forward. Now, I would like to request our founder, MD and CEO, Mr. Chandrasekhar Ghosh, to brief you all about our bank's operational and financial performance, along with the development for the quarter and year ending FY23, strategies going ahead, and way forward for FY24. Over to you, sir.
Thank you, Vikash. Namaskar. A warm welcome to all of you to the result announced for the fourth quarter of the financial year 22-23. Firstly, please allow me to introduce to Ratan Kumar Kesh, who has joined the bank as an executive director and the role of chief operating officer. With nearly 3 decades of stellar experience, Ratan has a track record of leadership in operations, including some complex ones like the transformation, automation, customer experiences, quality improvement, and other related functions. Coming to the result, I am pleased to state that the January to March quarter of this financial year was a good quarter for the bank. It was actually better than our expectation. We have seen growth across all parameters. On this the quarter basis, if I analyze the full year, I think that it has been ended very strong financial year. All the asset quality has coming back. Within these circumstances, deposit growth has become very strong, and I feel that from 23-24, very strong and sustainable growth will come to the future. In quarter 4, we see that the 22-23, we bank have been reached in the 3 crore customers. Out of that, the 37 lakhs new customer added in the financial year 22-23, which is shown that the future growth is very potential for the bank. Coming to this, the advances. Advances, the first point I like to highlight it to all of you on that. Our secured book has come 42% in this financial year compared to the last year, which was in a 36%, and we expected approximately by 26 we'll be like to go to this the secured book on advance 50%. Quarter 4, we have been seeing that as advance has been recorded a 10% year-on-year growth. And asset quality, I'll come to the later also. Next point is there, the where this growth has come and how the diversification of the bank are maintaining.
I've spent centuries evolving with the world. That's the nature of being the economy, observing investors choose assets to balance risk and reward, with one element securing portfolios time after time: gold. agile and liquid, a proven protector. An ever-evolving enabler of bold decisions, an asset more relevant than ever before. Gold, your strategic advantage.
This is my comeback. Start yours at purdueglobal.edu.
So we see that the personal loan, gold loan, two-wheeler loan, and auto loan, which is consist as a retail loan other than housing loan, has grown 233% year-on-year and 110% quarter-on-quarter. The commercial bank vertical, SME and NBFC lending, it has been seen that 72% year-on-year growth and 29% quarter-on-quarter growth. The housing finance book has registered as a growth of 13% year-on-year. We have a little bit one fact we would like to raise in here. The last quarter, the January and February, we have been shifted from old application of the Gruho to the new application, which is called the LOS system in the bank, which is a flex queue. So that is a two months of a challenges. So that it has been little bit hit to my growth of the housing loan. But again, we have been seeing that the last month in the March and April has come back. So that we are expected this financial year 22% to 25% year-on-year growth will become to the housing loan. Now to deposit. Deposit, we've seen that the 12% year-on-year growth has come, which is amount-wise 1,08 crore, which is seen that the total business of Bandhan Bank and the rest in this financial year more than 2 lakh crores. I would like to specially highlight that MFI customers contributed is a less than 4% of the total deposit. Due to our focus on the deposit, our CASA has increased 290 basis points higher, which is the 39.3% is in CASA ratio has come in this quarter, which was in the earlier quarter was in a 36.4%. But the total CASA deposit has been increased to the 6% and CA increased to 35% year-on-year. If I come to this, another key point for our deposit, we are focusing to the retail. Retail deposit has come 71% of the total deposit, which was in a earlier, it was in a 69%. We have seen a good improvement in the overall collection efficiency. For the bank, overall collection efficiency, excluding NPA, stood at 98.5% in the month of March, up from the 96% in the March of the last year. A minor improvement from the 98% in December 22. So if I say that the December 22, we have been seeing that the March 23 has been 0.5% increase, which is we see that the microcredit industry, it is a 98.5 to 99% is a normal collection efficiency. I want to particularly highlight that traditionally West Bengal and Assam have been our largest market for banking unit, which is called the microcredit. But now markets like UP and Bihar also have the significant promise and are seen in the top 3 markets, West Bengal 36%, Bihar 14%, and UP 10%, and Assam 7%. So these are the microcredit portfolio consisting on that. Of the loan disbursement, in the last 2 years, our on-time repayment rate is more than 97%. I am saying that the 2021 and 2021-22 and 22-23, whatever the loan we have been disbursed to the microcredit, on-time repayment rate means in the same day they are paying the full installment, it is a 97%. But other side we saw that which are the customers received the loan is a 93-94, then all disbursement customers have been paid 99% plus of the repayment rate. It has been shown this OTR, the pandemic has been over and crisis has been over. Now new way our credit growth is coming and quality is coming back. Bank has registered a net profit of 808 crores for the quarter 4 financial year 23 against the net profit of the last quarter 291 crore. For the full year of the financial year 23, bank has registered a portfolio profit 2,195 crores compared to the last year, which is that 126 crore. Our net interest income has shown an increase in the 19% quarter on quarter, which seen that in the fourth quarter it was in a 2,472 crore, but the third quarter 2,080 crores. Our net interest margin have been increased 80 basis points.
It's everything you wish for. Your site traffic is skyrocketing until this happens. Be careful what you wish for. Build your site on a platform that's engineered for success. So as traffic spikes, instead of overloading your servers, your site infrastructure scales to handle it. Backed up by tens of thousands of servers worldwide, maintaining 99.98% uptime. Wix.
From the last quarter, which is now 7.3% compared to the 6.5% is at quarter 3. Total credit cost for the quarter 4 financial year 23 was in a 2.9% compared to third quarter 6.4%. Our gross NPA in quarter 4 stood at 4.9%, and which is that the 7.2% in the last quarter. And the net NPA has come 1.2%. Last quarter it was in a 1.9%. So it shows that the gross NPA and net NPA both has come down from the last quarter. We have already seen significant improvement in our SMA book, which has come down across all buckets. We have seen 1% increase in our PCR at 76.8%, which was increased from the 70.4% in the previous year. Bank delivered ROA 2.2% and ROE 17% in this financial year quarter 4. We have added about 14 lakhs to the customer in this quarter. Coming to this, the digital performance of the bank, 94% of the total transaction of the general banking customers have taken place in a digital mode. 53 crores of transaction took place on UPI through Bandhan Bank. 31% of the retail deposit are coming from the online channel. And we have seen very successfully we have been launched new plus digital savings bank account. We have that the 30,000 of the tab used to open the bank account with a biometric. It has been shown us very good the way we are opening the account and customer will be like to board on the bank. And we are working on that. That is a digital sanctioning of the loan, retail asset loan, and it will be also successfully running now. Strategy. We will continue to dominate our traditional bases in the East and the Bharat, while building greater momentum in high potential and premium pan-India markets through targeted geographic diversification, deeper market penetration, localized hiring, and leveraging of the Bandhan brand. Other than this, we are 3 products are focusing in this financial year, which is newly started in the bank. Commercial vehicle lending, loan against property, and government business operation. Among others, These three are our focus area for this financial year. We are taking multiple steps to drive cross-sell and branch-led sales to grow the retail assets and liability portfolio. We'll fully utilize our branch presence to increase our liability and asset portfolio and also increase productivity per employee supported by digital and analytics. What is the way forward of 24? Coming to the outlook for the next financial year, that is 23-24, we expect to grow our advances by nearly 20% and a little higher rate of deposit growth will come 24. And we feel that we'll be like to focus remaining strong on the retail segment and diversification. Our CASA ratio, we are targeted on that 40% will be like to full year we find out. We see that our NIM will be like to 7 to 7.5%. We expected our credit cost around 2%. We expect a ROA 2.6 to 2.8% and ROE 18 to 20%. Thank you to all of you to listen patiently me. And you have some question, I like to give my best experience share with all of you. And confidence on us, and we are doing very good on that. Thank you.
Thank you very much. We will now begin the question and answer session. Yes.
Now I would like to request our CFO, Mr. Bandhan, to give you some more details on the financial parameters during the quarter.
Good evening, everyone. I'll take few minutes to take you to the highlights for the quarter, few material events which I feel need discussion. Overall, I would say this was a good quarter for the bank, with asset growth and the deposit growth was at a year high. On the asset quality side, particularly, the bank did well. On the collection efficiency side, as Mr. Ghosh mentioned, we crossed 98.5%. The stress pool came down from 76 billion to 55 billion. On the DPD movement side, we've seen the overall overdue, the 0+ DPD in the EEB segment. Even without considering the ARC sale, we have seen a reduction of 518 crores. So the asset quality continues to improve. So this is the second consecutive quarter where we have seen the reduction in the DPD over the previous quarter. So I think we are happy to take the questions. I'm sure you will have few. Happy to take them. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Yeah, hi, congratulations. So firstly, what explains the flattish interest expense in the quarter? That's my first question. Also, if you could give the absolute number of slippage.
Two things. One is our cost of fund has remained flat quarter on quarter. So that's one. And then while we have seen in the slightly increased quarter on quarter the interest expense, largely we've done well because our cost of fund has remained flat quarter on quarter. On the slippages side, our total slippages for the quarter, I'm talking about the gross slippages, is 1,118 crores. The recoveries and upgrades is 468 crores. So the net slippages is 650 crores. This is at the bank as a whole. If we look at the EEB vertical, the gross slippages are 730 crores, recoveries and upgrades are 200 crores, and the net addition is 530 crores.
Got it. So, just on cost of funds, everyone's seeing a lot of pressure on cost of funds. So, what's a little different for you?
So our mix improved. If you look at our growth in deposits, the growth in CASA was higher than the growth in overall deposits, and even the share of current account improved. So that helped maintaining the cost of funds.
Okay. Thanks a lot. Thank you.
Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Prakhar Agarwal from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. 2-3 questions. First, you mentioned about the mortgage portfolio that there was some disruption on growth because of change in core system. Is that activity planned for other portfolio as well? And in that context, could there be some disruption on growth? That is my first question. I'll come with second question.
So let me. So yeah, as we discussed last previous few quarters, the bank is looking at an IT transformation. We are getting a new CBS, including the loan LOS and the LMS system. As part of that transformation strategy, we first migrated our housing finance portfolio, which was in a different system, the grid system, which while Guru was using. And later on, sometime in Q2, we would look at migrating the other businesses, the entire other piece, to the FlexCube. Now, for us, one reason why we did it in these 2 tranches is because we wanted to first have a feel of, the transformation, have that learning of transformation. And with this learning of housing finance transformation, we are confident that the larger transformation that will go through in Q2 will be relatively smoother.
So 20% growth that we spoke of includes of that particular disruptions if there are any.
Yes, because these disruptions, if any, are not a perpetual disruptions, right? These are 1-month disruptions. So we can always cover that back. And given that now we have the learnings from the housing finance transformation, we are that much more confident now.
Got it. So the second is on the slide 7 that we spoke about.
Prakhar, Ratan would like to add here something. Ratan.
Yeah, sir.
So I'll repeat a little bit what Sunil said. First of all, we have a learning from the housing finance that we will utilize for the next tranche. More importantly, there may be disruption for few quarters, but the transformation will more than offset that in the subsequent part of the year, and therefore we don't see any disruption from the overall period of time for the whole financial year.
Got it. Just on the EB stress pool that you probably said about 55 billion outstanding as of March. When I look at your estimate 2 number in there, that number has not yet declined. Any particular reason as to why that number continues to be sticky? I'm just particularly talking about estimate 2 number in that pool.
So it's at 2.4%, right? So it has come down, so to speak. But yes, you will always see some forward flows.
So that forward flows, the forward flows has declined, or probably that intensity of that forward flows remains probably elevated number.
No, but when I say that SMA 0, 1, 2 and NPA put together, we've seen a reduction of 518 crores without considering the ARC sale. Clearly shows that the asset quality is improving and the forward flows are coming down.
Got it. Just one last question from my side. When you talk about CGFMU recovery and you say that 11 billion is expected in Q1 and 6 billion in FY25, why is the timing difference? And when you talk about credit cost of 2%, does that include this 11 billion that you probably expect to recover?
So as you all aware that we can claim only once in a year, while the total eligibility for us stands at 17 billion, it depends on the timing. If I claim this in October month, I can claim the entire 17 billion together, right? But if I need to claim it in the first quarter, then the eligible pool is only 11 billion. So that's how we are spreading it into the two tranches. What was your next question?
The credit cost that you guidance that you gave about 2%, does that include this 11 billion recovery that is expected in Q1?
No. So which means I'm not taking the benefit of this 11 billion.
Got it. That is it from my side. Thank you a lot. Thank you.
Thank you. The next question is from the line of Yuvraj Chaudhary from Anand Rathi. Please go ahead.
Thanks for the opportunity. I have a couple of questions. So firstly, our EE book saw strong growth in disbursements during the quarter. So were there any specific states, regions where the growth was strong, or was it a broad-based growth across regions? Would be helpful if you could throw some color on that. And secondly, it would be, if possible, if you could provide average ticket sizes of our EE book.
So yes, the growth firstly has been broad-based. Tactically, we've been slightly lower in terms of growth in the state of Assam. But other than that, we've been growing across all states. We've identified few states which are the growth areas for us. So particularly growth in those states will be higher. States like UP, Bihar, Telangana, Andhra, Madhya Pradesh, Gujarat. These are the states where we see huge potential, and we are opening branches in these states. So the incremental addition to new customers are also increasing in these states. And that's how their share, in Mr. Ghosh in his opening speech mentioned that if we now look at the top 5 states, it's West Bengal followed by Bihar and then UP, and then comes Assam. 2 years back, you all remember it used to be West Bengal followed by Assam. So that's how this diversification to the new states are happening.
Thanks, sir. And sir, if you could also possibly provide average ticket sizes of our EEB book.
So on the disbursement side, our average ticket size is about 50,000 for the group loan and about 1,20,000 for the individual loan.
Okay, sir. Sir, last question. Sir, our CD ratio is now almost at 97%. So is there a target CD ratio we have in our mind?
Sorry, you're talking about CD ratio?
CD ratio, credit to deposit ratio.
Yeah, so see, given our capital base and our portfolio which are eligible for refinance at an attractive rate, and we get a longer tenure of funds also from these refinance companies, we believe the CD ratios for us should be in this range of 95 to 97%.
Okay, sir. That was helpful. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star followed by 1. The next question is from the line of Rahul Jain from Goldman Sachs. Please go ahead.
Yeah, hi. Good evening, Mr. Ghosh and Sunil and everyone. Bunch of questions. Just to start with the slippages, so Sunil, EB, you said about 700 crores and the residual is 400 crores. So can you give me further split between within EEB, what's the group slippages and what's the individual? That's one. And second is within the non-EEB, which segment would be contributing to those slippages?
So firstly, the overall slippages in the EEB in Q4 was 730 crores. Split, I will get it, but broadly it's in the proportion of the portfolio that we have. The non-EEB slippages is 388 odd crores. And if I have to break it into the 4 key components, the SEL, the small enterprise loan, which is part of our commercial banking here, that stands at 66, the gross slippages. The recovery is 18, the net slippages is 48. SME, which is the BBG and the MMG together, the gross slippages was 68, recovery was 49. This was more of a technical in nature. That's why the slippages and recoveries both are higher. Housing finance, because of the disruptions for 1.5 months that we saw, we had again a technical slippage of 231 crores and a recovery of 191 crores. So because of that transformation, we had 1 month of slippages, but it again came back to normalcy in the next month. The retail is the balance small amount.
And this 191 is already part of upgradation and recoveries in this quarter within housing?
Yes.
Okay, fair. That's helpful. Second is on the provisioning strategies. We talked about 2%. You're not taking the benefit of 1,700 crores. So that will be over and above 2% is what you're guiding for?
Did you ever stress about us having 3 kids?
No. That was always part of the plan.
3 kids? This was never part of the plan. These kids order the lobster mac and cheese. What if she wants to play golf? We're gonna have to outlaw golf. Absolutely no golf in this house. Not under my roof.
Since we started working with Empower, all of our financial questions have been answered, so we don't have to worry.
So you never...
Nope, always part of the plan.
Join 17 million people and take control of your financial future to empower what's next. Start today at empower.com.
As in, what I mean to say is the income comes in and you take it in the provisioning line. And top of it, you've got 2% provisions.
Yeah. So, but see, there will not be any P&L impact for that. So
yes.
When the CGFMU money comes, right, I have to necessarily allocate it as provisions of NPA. Right. So we will have to do that at the accounting wise. But the idea here is to not utilize that money and keep it in the balance sheet. So we will have to see how do we again reprovide it, whether as the standard asset provision or as the contingent provision. At that stage, the board will take that call.
Got it. Okay. So whatever 1,700 crores could be utilized towards building contingent provisions or standard asset provisions for future use. Is that understanding right?
Yes.
Okay. Just one more point I wanted to understand on what's the existing contingency provisions that we have right now, apart from the specific provisions?
So, if you see, we have increased our PCR, right? It has gone up from 75.5 to 76.8%. So it's essentially large part of these provisions we've allocated to the customer accounts. So the additional provision other than the specific provisions will be a small amount of about 500 odd crores, which is the additional standard asset provision over and above the RBI requirement.
Okay. Okay, that's helpful. Just one or two last questions. The sell down, I think, which you've done about close to 5,000 crores. Which buckets would those be from? Of course, 2.5 is, I think, write-offs, but remaining 2.5 would be from what buckets? If you can just help elaborate that.
So they were NPAs.
Okay.
Yeah, so they were all NPAs. So we did 2,614 crores from the technical write-off bucket and 2,316 crores from the NPA bucket.
Got it. All right. I think that's very, very helpful. And one last question, small bit, you talk about the EEB loan portfolio, which now has the West Bengal, UP and Bihar being the top 3 contributing states. If you can also help us with the mix of what is it as of today and what was it, let's say, a year back, just to get some color around the diversification strategy within the MFI book.
Yes, I'll come to that. I'll get that number. But in the interim, I just want to extend the previous conversation on the ARC sale. Right, the portfolio, we've done the ARC deal in 2 tranches. One, we did it in the December quarter and the other one in the March quarter. So just to give you an update how the recoveries are panning out on that whole. Total recoveries that we have made on the portfolio that we sold in the month of December stands at 342 crores. Right, we had taken 414 crores from the ARC and the investor. We've already recovered from the customer 342 crores. The reason this is important is because once we repay the ARC and the investors along with the assured IRR, the entire recovery comes to the bank.
Okay.
So that So that's update on the ARC pool performance in terms of how are we recovering money from that pool. Now to your question on what has been the share of
top 3 states, Bengal, UP, Bihar, versus last year.
22%. So let me tell you, in March 22, my Bihar was 6,900 crore on a book of 62,400 crores, which is now 7,900 crores on a book of 56,900 crores. UP was 5,320 crores on a book of 62,400 in FY22. Currently, it is 5,729 on a book of 56,800. And West Bengal was 25,315 on a book of 62,400 in March 22. Currently at 20,364 crores on a book of 56,800.
Got it.
I don't have the percentage ready, so instead of calculating, I thought in the interest of time, I'll give you.
Sure. That's very helpful. Thank you so much, and I wish you all good luck for the future quarters. Thank you so much.
Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Himanshu Taluja from Aditya Birla Sun Life. Please go ahead.
Hi, sir. Thanks for the opportunity. Just a couple of questions at my end. Firstly, sir, a few questions on the asset quality. Given you have highlighted that we are from the MFI book, EEB book, we have seen a slippages of 700. So if you can just further give a breakup in terms of how much you have seen from the incremental book and the existing stress book, how are we seeing those trends? And secondly, from your total stress book of 55, which has come down from 76 to 55, some bit of part from the ARC sale as well, how we are going to see this incrementally in the coming quarters? So that's my first question.
So coming to your first question, 730 is the gross slippages in EEB. About 99% is from the existing stress pool, which is SMA 1 and 2.
Okay. So hardly something has contributed from the new business, from the recent business.
I mean, unless it's a non-starter case, you can't have a situation where a zero DPD customer becoming NPA in one quarter.
We just wanted to say how is the collection trends of the new business basically.
So that Mr. Ghosh told in his initial update.
If I say that on the last year, whatever we are disbursed the loan, last year means 22-23, the out of those loan, they are paying us 99% plus. So that means if I say that this is the slippage has come, which is not from the 22-23 disbursement customer. This is the one cost.
Sure.
And 21-22 customer who received the loan and 22-23 received the loan, together it is a 97% plus. So that very few people has come from this. If it is come from last to last year, not the last year.
Sure, sir. And on this pool of 76 to 55, how one should expect this in the coming quarters from probably?
So see, directionally we've seen the stress pool coming down, and that should continue. The good part is that there is no element of any, doubt in terms of coverage there, because of these 55 billion, we have 38 billion of coverage and 17 billion of CGFMU. So whatever we recover will help us reduce the pool, the stress pool. So we are at a quite comfortable position here.
Sure, sir. Sir, second is on the growth. When you're guiding for a 20% sort of a loan growth runway for FY24, where housing is expected to grow 20 to 25. But what is in your estimates for the MFI business? And secondly, how much you are seeing this growth of MFI business will be contributed from the new borrower base?
If you see that the MFI growth will be expected in the 17 to 18%. And this is one. And second point on that, always we've seen that the new customer is coming to this, the MFI book is in 10% to 12%.
Fair, sir. Thanks. So last question is around your deposits. So how are you seeing the retail deposit traction, and how one should expect these trends, probably the CASA ratio, probably the retail deposits, how you are seeing the trends for the coming year?
With Squarespace, you can make a website to sell anything. Anything?
Anything.
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 Did you know a birth control pill doesn't need estrogen to prevent pregnancy? Slind birth control is over 98% effective and is estrogen-free, with a flexible window to catch up on a missed pill and periods on a schedule. So if you have estrogen concerns, or if you're just interested in avoiding unnecessary hormones, say goodbye to estrogen and hello to Slind. Don't take Slind if you have kidney, liver, or adrenal problems, cervical cancer, or hormone-sensitive cancer, or unexplained vaginal bleeding. If these happen, stop Slind and call your doctor. Before taking Slind, tell your doctor if you may be pregnant or have had blood clots, stroke, heart attack, high potassium in your blood, diabetes, or depression, which can lead to serious side effects. Talk to your doctor about Slind today.
So we have Shantanu Singh Gupta. I'll request him to take this.
Thank you, Sunil. Thank you for the question. So, look, our outlook for deposits for FY24 looks quite robust because we have over the last many years seen consistent growth in our deposit book. We have done some specific interventions in the portfolio to make sure that our percentage of CASA goes up, and therefore you can see that in our CASA ratio. So our outlook for 2024 remains quite strong in terms of growth. We would focus on granular growth because of the fact that we have a network which we are expanding, and we believe that we will get value from those incremental branches. We also have, invested in, specific segments that will help us bolster the growth on the savings and current account side. We also are looking at reinvesting into the business banking proposition so that we can focus on current account. So our outlook would be strong. We believe that the focus would be on CASA, current account, savings account growth, and that's what we're going to look forward in the coming year.
Sir, anything that you want to highlight from a new initiatives that you have taken to improve your liability franchise? That's my last question.
So there are two or three things that we have done. One, we are coming up with new branches, as we mentioned last time. So that is coming up. We've already got, we had a plan to open 551 branches. Over half of that is already done. We expect the balance to come in by end of this quarter or maybe spill over to the next quarter. So that's one. Two, we are also invested in the digital platform, and we believe that with the investment of, account onboarding being completely digital, we expect and anticipate the growth to come in those, on those lines. We believe that with good customer journeys, we will be able to get, deeper into the customer wallet. So those are some of the initiatives besides what I already spoke about, which is on, the new segments that you're looking at.
So
sure,
I'll add one just line with what Shantanu said. Given that we are going ahead with our technology transformation, the new core banking system will enable us to launch many more new products.
which will not only improve customer experience and transaction capability, but the new product lines will build more stickiness and more hooks for the customer to bring more deposits to us.
Sure, sir. Thanks.
Thank you. The next question is from the line of Param Subramaniam from Nomura. Please go ahead.
Yeah. Hi. Thanks for taking my question and congratulations on the quarter. So firstly, again, picking up from the last question, Mr. Ghosh, in your opening commentary, you highlighted that, government business is going to be a key area of focus for the next year. So could you highlight, is there something in the pipeline, especially on the deposit side, since, you put out a guidance of 24% deposit growth for next year, which is, substantially higher than this year. So, yeah, some color on the government business that you're talking about. That's my first question.
Yes, I ask it to Shantanu, will be like to give that details. Okay.
Thank you, sir. So yes, government segment will be an important segment of growth. We have invested in our people, so we've created a separate vertical with expertise across the market. This is a specialized function, and therefore we have the right skills right now available. We are investing in a platform to make sure that we can act as agency bank for some of these government organizations. We've also seen some success coming in through empanelment with some of the government agencies across the country. So I think we have this is a great choice that we've made, because this is one area that we do believe has quite a few upsides. And I do think that this particular segment will add value to our overall deposit franchise. But just to add one more thing to this, we obviously will have features and benefits for this particular segment. Some of that includes tax collection, etc. So the value-added proposition around this segment is something that we are also working on, so that we get the right impetus and we go forward, specifically for this segment.
Got it. That's helpful. My second question is on the MFI portfolio. How much of this? So we took that rate hike around November of last year. So how much of the MFI portfolio has repriced upwards? Some rough color on that, and how much more to go in terms of the lending yield, picking up further on this book.
We had taken a 300 basis point increase in the last financial year. Starting 1st April, we've further taken a 100 basis point increase. To your point on what percentage of the portfolio is repriced.
When I hear the word credit, I think shopping. This glorious plastic card that allows me to get what I want when I want it. It's amazing. An outfit here, an outfit there. I get to tap my card and think about the money later. But if I'm not careful, I can get into some serious debt. Let's see what people have to say about their finances. Do you have a credit card?
I have just a debit card right now.
Okay, so
I don't trust myself with a credit card at the moment.
What do you know about credit? Do you understand how it works?
Actually, not really.
I don't know much about credit. Yeah.
I am clueless on that.
Do you know why it would be good to have a good credit score? Like why it's helpful?
Yeah, it's like everything. So you can get a car, get a place to live, be able to purchase things.
It kind of kills me that you have to have credit to survive in this country. I'm like, why can't I just live off my debit card?
So what is credit, and how can you make it work for you and not against you? This is Your World on Money.
What is going on?
So I did some digging to find the credentials of credit, and this is what I found. Credit is the ability to borrow money or access goods or services with the understanding that you'll pay up later. There's an agreement between the borrower and the lender. Having credit enables consumers to buy goods or assets without having to pay for them in cash at the time of purchase. Believe it or not, credit was even a thing of the past before banks, retailers, and others extended credit to people. One of the earliest records of credit and the concept of lending can be traced back to ancient Mesopotamia. Back then, planting a single seed would yield a grain plant with hundreds of seeds on harvest days, so farmers began to borrow seeds issued against a later payment.
This was used in a similar manner with animals, where the repayment was issued with the birth of a new calf. Instead of borrowing grains or animals, today we can borrow money and pay it back later. Now, there are many different types of credit, and I'll mainly be focusing on consumer credit because it pertains to most people today. Consumer credit means, for example, credit cards. And as a good neutral Libra, I won't be recommending you to be for or against credit cards. We'll just be discussing it because, knowledge. Well, hello, Joe. Thank you so much for joining me here today.
I had to learn all this stuff the hard way, so I'm super happy to help everybody learn it in an easier way than I did, because if I can come back from that, so can you.
All right, so since you're a money management expert, could you tell me about credit? Do I need it?
Well, I know about credit because I messed mine up myself. And the biggest lesson that I think we all need to learn is that credit is a paradox. We certainly need it to buy things like a car to get to work, maybe, or a house for a roof over our head, but we want to try not to use it as much as possible. In essence, credit means we're trying to use other people's money instead of our own, and that can be really, really dangerous.
Specifically thinking about credit cards, what are the main do's and don'ts?
The basic credit card rule is this. Do not use the credit card if you don't know where the money's going to come from to pay it. If you don't pay off your credit card on time, they're going to charge you this ginormous interest rate, often 18, 21, 25% or more. So you want to have some systems in place. I like setting up automatic payments so at the very least you don't get behind on your payments.
That makes sense. Can you define what a credit score is and why is it important?
A credit score is the way that any company issuing credits decide whether you are somebody they should be loaning money to or not. There's three main factors that make your credit go up or down. The first one is paying that bill on time. If you at least pay the minimum payment, you're going to be great. The second is utilization. If they let you borrow $500, have you already borrowed all of it, or have you borrowed very little of it? If you borrow very little, they're much more likely to think that you don't need the money, making them want to loan you more. And then the third is how long you've actually had credit history. If you've had it for a long time, that's going to make it go up quickly. If you haven't had credit very long, it's going to take longer to build.
So should I be using my credit card for everything or just small versus big purchases?
Using your credit card means using it responsibly, and a great way to get started with credit is to use it just for small purchases, not for big purchases. If I'm buying big things on my credit card, it's so easy to get behind on those payments. But if I'm using it for little things on a monthly basis, I'm showing the credit card company I'm responsible, number one. And then the second thing that it does is you're not going to owe these monster interest rates sometimes to some credit card company. That's extra money coming out of your pocket you don't need to spend. But the third thing is, and maybe the most important when you're young, is that allows you to build a great credit history so that you get higher amounts of credit later on when you might need more.
That makes sense. Thank you so much. That was such a helpful answer. I am fulfilled with credit wisdom now.
Woohoo! High five.
The most important thing about credit is it's very useful to build a good credit score, but it's equally important that you pay off your credit cards in a timely manner. As much as possible, it's better to avoid going into any sort of debt or having to use your credit card in the first place, but that simply isn't realistic for most Gen Zers and millennials. So I would encourage less spending on things you don't really need in the first place. Put things in your online shopping cart, but then let it sit over the next couple days and then think if you really need it. The less money you spend, whether it's yours or on credit, the better.
I have a shared credit card with my mom. My parents do not trust me to have a good credit score, but I need to build my own.
Yeah.
I'm Yvette Nicole Brown. I'm here to talk about the impact of living with obesity, why a doctor can help, and how you can go from fear to action if you are struggling to get to one.
I'm excited to share my work with you.
You know, I found that taking the first step towards anything important in life is often the hardest, but that second step, that's a whole lot easier. There's no magic fix, but there is a path forward. You can find us online at itsbiggerthan.com and follow us on Instagram at itsbiggerthan.
Typically, given our portfolio of about 57,000 crores and the disbursement of the last 2 quarters, I would say close to 60% is what which has got repriced.
Okay. And we have a 100 basis point further increase starting from April. Got that. My last question perhaps, so on slide 14, you called out this TD against FD, or rather overdraft against FD. So what exactly is that, sequential uptick? If you could give some color on that. Yeah, that's it from me. Thank you.
So these pertains to few large deposit accounts where they had taken loan against fixed deposits right at the end of the financial year. These are very short-term loans, so that's why we wanted to highlight that this is not something which is a focused area for us, but it comes with customer request, and since this is a very short-term in nature, we thought prudent to tell that these are short-term in nature.
Okay. Sunil, are these chunky accounts? Yeah.
Yes, as I said, these are few accounts. But these have been with the bank for the last 2 years.
Okay. Got it. Thank you and all the best.
Thank you. The next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Sir, if you look at your SMA, 1012, so we are at about 5.6%. When your collection efficiency has been ranging between 97 and 98, so fair to say that on a normalized basis, this number needs to settle to 3%?
Yes, but when do we reach that normalization? Is it Q3, Q4? Is it something that we'll have to debate? But you are right. If my collection efficiency is 98% and all of this is full paying customers, then ideally the delinquency should not be more than 3.
Okay, understand. And in your credit cost guidance, you would be assuming this 3%, right? In your next credit cost guidance.
Yes.
Okay. Got it. And the last question, sir, how should we think about your non-interest income, and if you can give some breakdown of your non-interest this year, before you listen?
So non-interest income, if you look at the key contributors, the top 3, 4, one sec, let me just get you that. So the highest for us is always the processing fee. So in the 629 crores, 300 crores was the processing fee, followed by third-party product distribution of 134 crores. The third, now that we've sold our portfolio to ARC, the recoveries from bad debts or the return of account, we can't account for it. We have to park it in the liability account to repay back to the ARC. But what we get is the collection charges on these portfolio. So the third contributor is the collection fees on account of collection from ARC portfolio, which is about 55 crores for the quarter.
And is there any chance that the PSLC income recovers next year or no?
We are not budgeting for it. There is always a possibility, but we are not budgeting for it.
Okay. Thank you, sir.
Thank you. The next question is from the line of Manish Agarwal from Phillip Capital. Please go ahead.
Yeah, congratulations, team. Just a data-keeping question. Would you like to call out what is the outstanding standard asset provisioning apart from 500 crore which you mentioned?
One. Yeah, so 488 crores.
And apart from 488, 500 is the additional standard provision, including standard restructured, correct?
No, so standard restructure is part of 488.
Okay. So 488 and additional 500 is the contingent provision so far.
Yes. So what we do is, This includes 0.25 or 1%?
No, this is 20.
Yeah. So what we do is we provide 1% on the micro banking portfolio or the EEB pool. The regulatory requirement is only 0.25. So when we say our standard asset portfolio, including a standard asset provision, including the restructured, is 488, we are considering only 0.25, which means 0.75 goes into the additional provisioning bucket, which is where it becomes 500 crores.
Okay, understood. And coming back to the short-term loan on TD, so, in one quarter, if I were to look at, there's a huge jump, almost 6-7% of your retail TD equivalent to that. I noted that you mentioned that some chunky account. So are these non-retail accounts or these are retail accounts?
No, these are not retail accounts. So the balances here is more than 2 crores.
And I would understand that not any amount of this will be part of our current deposit in any which way?
No, not really. It's a loan which has moved out of the bank.
Sure. Got it. Thank you.
Thank you. The next question is from the line of Anand Dama from MK Global. Please go ahead.
Yes, thank you for the opportunity. First, the cash that we have of 55 billion now, and if you look at the flow which happened into the current NPA market, particularly in the current quarter slippages, so the gap is just about 400 crores. So what extends the balance?
Sorry, Anand, I didn't get that question.
So basically, your SMA1, SMA2 pool, if you look at which was there in the third quarter, versus what you look at now. So last quarter it was about 25 billion, now it is about 21 billion. So there is a reduction of about 4 billion that we see in the SMA1 and 2 pool. So I believe this 400 crores are actually put into NPA in the current quarter, right?
Yes. So see, you can't really pinpoint which customer has moved there, but if you look at overall positioning, as we mentioned, the 0, 1, 2 and NPA put together, there is a reduction of 518 crores without considering the ARC sales.
Okay. So these slippages from the pool would have been higher, and then basically there would be a fresh flow of that also which would actually come into this SMA1 to bucket. Is that right?
Electrified. Hanguk Tire.
How's the chicken?
Oh, the prawns are delicious.
Oh, I have a shellfish allergy.
One prawn, very good.
Did I say chicken wrong?
Tired of people not listening to what you want? Yeah. The more we understand you, the better we can help you. That's what US Bank is for.
No, so the recoveries is also there, no, because there will always be a normalized slippage. But there will always be recoveries from this. From zero, from a DPD pool to the current pool. So the recovery from DPD pool to the current pool is higher than the slippages from current to DPD pool. That's how one should look at.
Okay, sure. And secondly is Assam relief.
Sorry.
Just to complete. This Assam relief scheme basically. Sorry?
Yeah, go ahead.
Yeah. So I was asking this second question, the Assam relief scheme, we've been hoping for a recovery long now. So when is it really going to come? Is it going to come in 24 or basically we do not expect that to come back anytime soon?
Yeah, it's very difficult to comment on anyone else's behalf. So, and since, as a bank we were very clear, this is a kind of this is not a right for us, right? Unlike CGFMU or ECLGS, right? This is kind of a grant. So we have not budgeted for it, but we are positive that money will continue to flow from Assam government. Quantum and timing is very difficult to estimate.
But is there any procedural difficulty from the agent side or from the bureau side that basically government is giving them, or like right now they have not budgeted for this and that's the reason they are not changing?
As I said, I will not be able to comment that because I'm not in a position to know that.
Okay, thanks.
Thank you.
Thank you. The next question is from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah, hi, good evening, and thanks for the opportunity. Sir, I just wanted to get the number of total provisions outstanding. So we have a specific provisions of around 4,000 crore. And we have given some numbers which includes restructured and some contingent. So I just wanted to check what is the total pool of specific. I think we can calculate is 4,070 crores, but what is the number outside that?
5,080 crores is the total provision in the books.
Sure. And sir, if you can also specify, we have the total net NPA at 1,228 crores. How much of that would be EEB? Just to understand that, once, so what is more or less done and what is remaining?
Net NPA of EEB. So typically we have a 84% kind of a PCR ratio in EEB, but I'll still check the exact number for you in terms of net NPA.
Sure. And the last question is to Mr. Ghosh. So sir, we have added Mr. Kesh to the board. I mean, the bank has added one executive director. I wanted to check if there is any plan to add more, or if there is any. So that is the question. If in the near term, do you envisage any more changes at the board level from management perspective, management executive perspective?
You know that earlier also mentioned, I will repeat on that. That is in last year, board have been decided that 2 executive directors will be like to taken. One for the non-business, one for the total business. So non-business already we have had, it is Ratan Kumar Kesh already joined on that. And we are now processing for the next one, which is the total business looking by one executive director, which helps us to future growth of the bank.
Right, and it should be let's say 1-2 quarters. Should be in this financial year, let's say.
Yeah.
Or is there any time? Okay.
No, this is in this financial year.
Sure. Thank you and all the best, sir.
Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Pankaj Agarwal from Ambit Capital. Please go ahead.
Yeah, hi, Sunil. Am I audible?
Yes, Pankaj, go ahead.
Yeah. Sunil, if I see your total stress pool in MSI, definitely it has come down by around 400-500 crores. But if I look at 0 to 90-day DPD, it seems still there is a forward flow, right? So though there is a 500 crore reduction, but there is a 500 crore of forward flow as well, right? Now, given that now recoveries are picking up and you are seeing a lot of customers are paying, partially paying or fully paying, right? Don't you think this forward flow should have stopped?
No. Ideally, we would have loved to have a zero forward flow. But in any business, there will be a steady state credit cost. And as we have highlighted that the 2% would be a credit cost, what we are looking at for this financial year. So accordingly, the slippages from the current pool to the delinquent pool is well within that guidance range.
So if I look at the reduction in this 0 to 90-day DPD, essentially half is forward flowing and half is basically going out of the pool. So it's fair to assume that out of remaining 3,200 crores, half of this could flow to NPA next year?
No, it's not that straight calculation. It all depends on the environment, our ability to go convince the customers. We are focused. We would want to, and we are seeing the environment improving, customers coming back. We don't want to put that number today. We've given a number on the credit cost side, so we'll stick to that. But the endeavor is always to be closer to customers and collect as much as possible.
Okay. And secondly, on your OpEx, if I see your OpEx ratio has gone from 3 to 3.5% over the last 1 year, with cost to income going to up to 42% now. Do you think it's the peak, or it has further scope to go up next year?
So I would say this is peak, but for it to come down, it will take a year or so, because we are still in investment mode, whether it's transformation, branch expansion, new business developments. We don't see it going beyond 42%, but to go back to that 35% will take a year or two.
So you think this business can be done below 40% cost to income ratio on a sustainable basis?
Yes, it can be.
Okay. Thank you. Thank you.
Thank you. Participants, if you wish to ask any questions, you may enter star and 1. The next question is from the line of Prakhar Agarwal from Elara Capital. Please go ahead.
Showing up on the first page of Google might not be the best for everyone. But for business owners it is. Take My Vintage's online store. It ranks for thousands of competitive keywords, like vintage clothing, which gets loads of searches on a monthly basis. And 80% of that traffic goes to their site. They also rank for over 1,000 images on Google. All of this drives tons of organic traffic every single month, leading to incredible organic growth year over year and a lot more sales. For those who want to be seen, Wix.com/SEO.
Yeah, hi. Thank you for taking the question again. Two things. One is in terms of when I look at what you said in terms of funding costs being steady on a QOQ basis. When we see last quarter when we saw a decline in size, there was a rationale that probably a lot of guys have moved from SAR to retail TD. So what has changed in terms of customer side here from bank side that we saw such a large accretion in SAR base essentially? And second, how do you look at funding costs moving from here on?
So let me start, and Shantanu can add. Now, firstly, nothing materially changes in 3 months. But what has surely changed is the pace of conversion from SAR to TD, right? Typically, when the interest rate environment turns, those rate-sensitive customers wants to move from saving bank to the time deposits. And once those rate-sensitive customers move, the incremental flow towards TD from SAR reduces, right? The pace of flow reduces, and which is what we have seen in Q4. So that's how I will look at it. Shantanu, if you want to.
No, I think that you covered that, yeah.
So that's about it, yeah.
And the second part, how do you see funding cost moving forward? If assuming that RBI does not make any changes to the system rate, then how do you think your funding cost moves from here on?
So directionally, it will go up in this financial year, right? And we are looking at at the end. Actually, it's very difficult to put a number, but I would say directionally, quarter on quarter till next 2 quarters, the cost of funds should go up because the repricing of TDs, if that happens, will happen at a current rate, which is a higher rate. And from there on, we will have to see how the interest rate environment goes, and accordingly, the cost of funds should move. But on the same side, our yield on funds will also go up. See, the good part is we face the difficult time having 70% portfolio on a fixed rate. So in an increasing interest rate cycle, you tend to lose because the cost of funds go up faster and the yield on advances relatively remain flat. So when the cycle turns, we would be the beneficiary of it, right? And so let's see when the cycle turns, and then that should help us.
Got it. What is our rate on MFI after the rate hike that we have seen after April 1st? Also, we have taken 100 basis points of rate hike. What is the sort of rate that we are offering on MFI?
22.95.
Are we still the lowest, or probably because we claimed at one point in time that we are the lowest in terms of that?
Yeah, so these are the lowest.
Got it. That answers it. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments.
Thank you, ladies and gentlemen. Thank you for your time. Good luck and good evening. Thank you.
Thank you to all of you.
Thank you. Thank you.
Thank you very much. On behalf of Bandhan Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.